you're going to pull up the presentation or if I'm going to share my screen. So let me know what works best.
I can share for you, Cheryl.
Okay, great. So
yes.
oh, and I should.
We are recording this. So apologies. We are recording this, just so people know, just this section.
Great. Okay. So thanks, everyone. And we can already move on to the second slide if that works. So I'm Cheryl Jones, and this is, I work with First Nonprofit, and First Nonprofit has been working with nonprofits for almost 30 years, just about 30 years. And that's all we do is work with nonprofits. So we have a very long history of partnering with nonprofits and partnering with associations who work with nonprofits to bring saving solutions to all of you across the country. And if you want to move to the next slide, that just is a slide of everybody we work with. And just a little bit of history before we go into the ERC. We started by working with United Ways to help them reduce costs around unemployment. So that's how we started, and we partnered with the associations of the Midlands to do that. But as we started hearing about the retention credits, our nonprofits started coming to us, and as Ann said, you get all of these inbox spams and commercials and everything else about the employee retention credit. And our member agencies, and we have a couple thousand of them, started coming to us and saying, could you help us with this retention credit program? So we took a hard, long look at it and said, yes, let us look for a partner that we can work with to help with the retention credit program. And we've been doing it now for a good solid year, and I've been doing it full time. So, I live, breathe, and sleep the retention credit. So I feel like with my experience,
Okay.
oh, I'm sorry, maybe people aren't muted, but I have 25 years of working with nonprofits. I really do understand nonprofits. So when it comes to the retention credit, I can have a long conversation with all of you about whether you're eligible or not. So here's some background on the employee retention credit. And there's plenty of time to answer questions at the end, but I think I'll be able to cover all of your questions as we go through this. So if you didn't already know, the employee retention credit was one of the things that came out of COVID, and it was lobbying through people like the National Council of Nonprofits, which Ann just referred to. It was them going back to Congress and everybody else and said, listen, people kept their employees during COVID, and they kept paying their salaries and they kept paying their health care, even though they didn't have work for them to do. So they kept their doors open, they kept paying them, and we would like some sort of relief for that. So what it is the retention credit is a recovery of your payroll costs for having kept your employees on your payroll through 20 and 2021. So it's a refundable credit that you get from the IRS for having kept folks on your payroll through that 2021 and 2020. So it's a recovery amount for keeping people employed. So how do you qualify? You qualify if your businesses were either temporarily or permanently suspended due to government mandates. So we all know that COVID hit long and hard back in March of 2020. So if in Nebraska, if it took a little longer to hit there, but if the government came in and said that you had to close your doors for a period of time because COVID hit, they said schools had to close, theaters had to close, restaurants had to close. If you had to close your doors, but you continued to pay your employees, then you're eligible to collect on the employee retention. So it's both wages and healthcare costs. So if you continue to pay their healthcare, you can collect on that. So nonprofits are eligible to collect for that. And I'll go into that in a little more detail on the next couple slides. So we can slide forward. So how do you qualify? So they set up two different qualification periods. So in 2020, if you are eligible, you can collect on 50% of the wages paid for 2020. So what the government is saying that you have to do is they're saying 2019, is the year that they're going to ask you to compare everything to. So when you start looking at the employee retention credit, they're going to say, let us look at 2019, because 2019 is the year where business was as normal. So pull up 2019, tell me what you looked at in 2019. So then they're going to say, 2020, you're eligible to collect on 50% of the wages paid. But what's going to qualify you is you're going to have a loss of receipts 50% less than what happened in 2019. So they're going to say, show me your balance sheet. Did you have a loss comparing it to 2019? Show me quarter one of 2019. Did you have losses of 50% compared to 2020 in quarter one that were 50%? And then they're going to say, move on to quarter two. Did you have a loss of 50% compared to quarter two of 2019? And then go to quarter three, quarter four. You only have to have a loss in one calendar quarter. You don't have to have a loss in every single calendar quarter. So when you're looking at it, you can get a credit for one quarter, but not for all quarters. So you don't have to qualify for every single quarter in 2020. You can get credits for just one quarter and not have to qualify for all the quarters. So a lot of people think that you have to qualify for every calendar quarter. I have a lot of organizations that just qualify for one quarter, and they may qualify for $50,000 in a quarter and not qualify for any other quarters. The other big thing that in 2020, only organizations that had 100 employees or less could qualify for the employee retention credit. So if you have 150 employees, you could only qualify if you had 100 employees or less in 2020, or you can only qualify for the first 100 employees. So that was different. In 2021, everything changed. And then the big difference, so if you listen to the commercials or if you listen to people that call you up, they say you're eligible for up to $26,000 per employee for the employee retention credit. That's only true if you qualify for every single calendar quarter in 2020 and 2021. In 2020, you're only eligible up to $5,000 per employee. So that's all you get in 2020 is up to $5,000 per employee. If you move to 2021, there was a big change. So there was a lot of lobbying going on. And what happened in 2021, you were eligible to collect up to $70,000. You were eligible to apply for up to 70% of the wages paid on your employees. So the needle shifted. You can collect more based on the wages. So up to 70% of the wages paid. And now, huge difference, you only have to show a loss on your balance sheet of 20% compared to 2019. So big change in 2021. You were comparing back to 2019. Now it's only a 20% loss. So that needle really dipped in 2021. You only had to show a 20% loss. And now organizations that had up 500 employees and greater, so almost all organizations became eligible to apply for the ERC credit in 2021. So anybody, basically headcount 500 could apply for the employee retention credit. And I didn't talk about this. Anybody that had a PPP loan is eligible to apply for the employee retention credit. So even if you had a PPP loan, you're still eligible to apply for the employee retention credit. The difference being that you can't double dip. So let's say that you got a $100,000 PPP loan in 2020, and you are eligible to collect $200,000 in the employee retention credit. The big difference is that you have to back out the $100,000 PPP loan before you get the employee retention credit. So you would only be really eligible for $100,000 in the employee retention credit because the IRS says you can't double dip. They said, good for you, you got a PPP loan, good for you, you're eligible for a $200,000 employee retention credit, but we're going to back out the $100,000 PPP loan that you already got. So we're only going to give you a $100,000 employee retention credit. So don't think just because you had a PPP loan, you're not eligible for the employee retention credit. Almost everybody that I've worked with that has received an employee retention credit has also gotten a PPP loan. It does not preclude you from applying for the employee retention credit. So don't think it does. So in 2021, you can get up to $21,000 per employee. So it's a big, big difference in 2021, how much you're eligible for per employee. So the needle really did shift in 2021. So we can move on to the next slide. So how do you qualify? We talked a little bit about this in the last slide. So again, you either had to have a temporary or permanent suspension of your operations due to, you can't, it has to be because either your government, the governor said we had to shut down, or your county or city said that you had to shut down. So if your city or your county said there was a big COVID, outbreak and we're going to shut down, if you were a library and your library was closed for 6 weeks because of what happened and you had to shut down, or your county shut you down, then you're eligible. So think about that. It can't be because your organization said, we're going to shut down. We're nervous. We want to shut down. We're going to send everybody home and we're going to pay for them. We're going to shut down. If you decided just to go virtual, if COVID came along and you said, okay, we're going to send everybody home, everybody has a laptop, we're going to go virtual and work, that doesn't qualify you for the employee retention credit. The government said, I'm sitting here working from home. I can see on Zoom, some of you are working from home by the looks of your camera. If you sent your employees home and they were able to continue to do what they would normally do by working virtually, that does not qualify you for the employee retention credit. The government says, great, you shifted, you did what you had to do, that's great. It was because you had to temporarily or permanently shut down. However, if, let's just say, you ran a program where you shuttled people back and forth to doctor's offices, and now nobody was going to the doctor's office. So now you had 5 drivers who didn't have anything to do, but you kept them on payroll. So part of what you did, one of your programs was shut down. That would qualify for the ERC credit. So think internally about your operations. Were there part of what you did had to stop? So if there was a program within your organization that had to shut down, then that part of your program would qualify. So that's a conversation that you and I are going to have as we go forward. I want you to think internally about your operations. So it doesn't have to be all of your operations were suspended. Perhaps one of your programs was suspended and you had to sideline some of your staff, but you continued to pay them because you didn't want to lose them. So we'll talk about that. So we'll look at that. So temporary, permanently, things like that, government. So what about supply chain? So if you had supply chain interruptions, you can talk about that. If there were things that didn't get delivered so that you couldn't do what you had to do. We worked with federally qualified health centers who had dental offices. The dental office had to close for the period of COVID. That qualified the whole health center because they had less than 100 employees. So think about that. They had 10 employees that worked in the dental office. That 10 employees were still paid, but that qualified the entire health center because that was under 100 employees. So we'll think about that. Again, you can qualify for all of the salaries and all of the healthcare benefits if you covered the healthcare benefits. Even if you were considered an essential employer, you can still qualify. So if you were open but considered essential, but you still weren't able to go in, we've worked with victims like crisis centers, but they still couldn't go into the hospitals, or the courts were closed if you couldn't go into the court systems. So your employees were sitting idle. So there are a lot of things that we need to consider when you're thinking about this. Next slide. All right, just simple case studies so you get a little visualization of what's going on. So nonprofit, they had 41 employees. They were working with visually impaired. They were suspended from March 16th, 2020 through July 3rd, 2021. So they had a very long suspension. They did not apply for any PPP loans. so they didn't have to worry about anything like that. They kept 5 staff in their office and continued to pay their salaries, but they did not cover their health care. They had a reduction in gross receipts for just 1 quarter in 2019 at $207,000 compared to the same quarter in 2020. So it dipped from $270,000 to $54,000. So that was obviously met the gross receipts. They qualified for credits both in 20 and 2021. So that was, you see what they got in credits, it was $227,000 in the ERC credits for that organization. Next slide. We'll just do one more case study that you can see. Neighborhood revitalization organization. So obviously they were not doing any neighborhood revitalization. Nobody was letting anybody into their houses to do anything at that point. So they had only a 1-month shutdown in 2020. We can keep going. They had a 1-quarter loss of revenue greater than the previous calendar quarter. They had 2 PPP loans, both were forgiven. They kept all 9 of their staff on payroll. They paid healthcare for 2 calendar quarters, which qualified them for recovery of a portion of those premiums. We excluded the PPP amounts and the wages that were greater than $10,000, and then they qualified for 2 quarters and received $104,000 in credit. So you see, even an organization with 9 employees, so even if you're a small organization, $104,000 makes a big difference. I had a conversation with an organization this morning, 3 employees, $86,000 in retention credits. So it does add up depending upon, they were a land trust. So they were impacted for almost all their calendar quarters because they weren't able to drive in any revenue at all throughout COVID. Next slide. So how do you determine eligibility? So we work with Walton Management. They're an organization out of New Jersey. All they have done in all of their history is tax credits. So they're really experts in tax credits. So they will help us work with you to determine eligibility. We track all of your wages and any healthcare costs to help calculate and track these reports. So the employee retention credits, and we consider all of the factors that we've talked about, PPP money, how it impacts the COVID, and then we do a final audit-ready deliverable report to you. So this whole process, we can move on to the next slide. So how do you apply for it? The statute, everybody says time's running out, time is running out. The statute of limitations to apply for this, to apply for 2020 credits, you have until April 15th of 2024. So you still have some time to apply for 2020 until mid-year next year. And then for 2025, you have until the end, for 2021, you have until mid-2025. What I say is that it's the brain power of, as Ann was saying, how many people are new to this call, and she's saying the turnover is more rapid happening. Going back to 2019, it's our memory of what happened in 2019 and 2020 that's starting to disappear, because you do have to be able to go back and say what happened in 2020, what happened in 2021. So it's that sort of information that you want to be able to recall and retain when you're filling out these reports, because you have to be accurate on this. I do say that, you want to make sure that your financials are clear and the information that you're providing us is accurate, so that we're giving accurate data to the IRS on all of this. How does my organization apply for the employee retention credit? The way that you apply for the credit is you have to file an amended 941X with the IRS. So that's the only way that you file. You have to file one form for every calendar quarter that you're eligible. So the IRS asks you to file a 941 form. It's really simple. I have to tell you, you file like 5 different numbers on the form, and then you file it with the IRS. It's not all that difficult. I've seen dozens of these forms come through. It's not that hard. How long does it take the IRS to provide your refund? They're getting a little bit better. The slide says 6 to 12 months to receive your refund. It's about 6 months to get your refund. So, the people that filed in November of last year are getting their payments now. Some of them that filed in February are getting their payments now. So it takes about 6 months to get your payments. So it's not fast, it's not terribly slow. And they usually send one quarter at a time. Sometimes you get 2 quarters at a time. It's just the IRS. You just have to expect that you'll get the money when they process and get it. The money that they give you, it's unrestricted money. It's like you and I getting a check from the IRS. You get to spend it as you see fit. So it's unrestricted. I had one organization, he was going to give all of his employees extra money to take extended vacations. So it's really how you choose to spend and see fit. Next slide. We already answered this. If you received a large PPP loan, how does that impact your employee retention credit? The only thing is it can't be double dipped. If you use some of your PPP loan to pay rent or other bills, that can be deducted out. So if you use 20,000 of it, then we don't have to apply that against your employee retention credit. We get to take that out of that. So if all of your PPP loan was used for 2020 and your credits were for 2021, then we don't have to deduct it out of your 2021 employee retention credit. So if you weren't eligible for employee retention credits in 2020, but your PPP loan was for 2020, then we don't have to deduct it out of your 2021 credit. So the PPP loan only gets deducted out of the year that your employee retention credit comes out of. So again, if you got a PPP loan in 2020, but you're not getting credits in 2020, we don't have to worry about taking it out of your 2021. So it's all factored in that way. Does PPP forgiveness count against gross receipts? It does not. So when I'm asking you to give me your receipts, your gross receipts for the ERC, you don't have to factor it into gross receipts because again, it gets backed out of the employee retention credit later on. So you only count it once, and that's coming out if you get the credits. So you don't have to tell me about it. You don't have to show it to me on your balance sheet up front. So who can help my organization file for the credit once we have it? Your payroll provider can help you file for it, but again, I'd say it's a fairly simple process to file for it. So either you can do it on your own or you can ask your payroll company or your accountant to do it. It's really up to you and how you want to go about filing it. So just a couple, you can skip this. It's just a couple comments of folks that have worked with us to do it. This will not, you can't click on this now because while it's a live presentation, it doesn't work. So if this will send you the PowerPoint after this, it says Nikon, and I'm sorry that I didn't switch that, but this is a survey. It's a really simple survey. If you want us to help you, I send you a 7-question survey, and it's really simple that says, you know, tell me about what happened in 2020, what happened in 2021. Did you have any losses on your balance sheet? You either say yes or no, and for what quarters. Did you have to, did you pay health care for your employees? How many employees did you have? Tell me a little situationally what happens within your organization, and then we'll take it from there. And then if you qualify, we're going to send you templates, little like Excel spreadsheets that's going to ask you for the gross payroll for your employees, and then we'll calculate your retention credits. How much do we charge? So I didn't talk about that. If you decide that you want to work with us, our fee for helping you through this process is 10% of whatever your credit is. So if your credit is $50,000, then our charge for working with you and doing all the work to get you what your credit is $5,000. And that's not due to us until you get the money back from the IRS. So 6 months from now, when you get the money from the IRS, then you pay us that money when you get the money from the IRS. And the good news is, and we didn't know this going into this process, is that the IRS is paying you interest on the money that they owe you. So if you're getting $50,000 from the IRS and most of that money is dating back to 2020, they're going to pay you interest on that money. So the interest that you're getting is pretty much going to cover the fee that you're going to owe us. So in the end, you're going to owe us very little money because you're going to get interest on the money. So with that, I can open it up for any questions that you might have. And my phone number and my email's there. So if you don't have any questions now, you can offer me. But I'll just tell you, like in the last 7, 8 months,